Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Monday, October 23rd, 2023. So, not much really went on in the market, and I'm just showing you. I put out this gold report. This was back in August, and I'm putting out another one. It's going to be out as soon as tomorrow, but I wanted to give you guys kind of a heads up. Anybody who didn't get it, really what you missed. And what I was saying, and here is my number one reason for liking gold. It wasn't because of inflation, it wasn't because of any, it's geopolitical uncertainty. And this is going back in August where you had the war going on between Ukraine and Russia. But now all of a sudden we're starting to see this with Israel and in the Middle East, the uncertainty going on there, and your gold has just absolutely exploded, and that's one of the reasons why I liked it. And I'm just going to show you the where we were, where the GLD was and what we were looking. So what I was saying this entire time was that you don't want to be buying a GLD or gold right now because it was forming a bear flag, and I was like, anticipating it to come lower. And my target was down to the 167.69. So here's an actual chart of GLD, and it went right down. If you remember in the report, I said I was looking for it to come down to the 167.69. So you wanted to be buying down here. You didn't want to buy where it was because at the time this is when I did that report. It was in where is it? August, right around here. So you can see that we have the S&P that dropped all the way down, made it down to the 168. So almost, going from 180, 190, 184 down to 167 and missing it by 50 cents. And this is the reaction. This is what I'm talking about. Why I really like gold. This is when the Israel, that everything, the nightmare started in the Middle East. And you can see we have GLT that went from 168 all the way up to 185. These are the types of moves that I'm looking for, and why I really like gold. And the reason why I'm putting one out as soon as tomorrow is because you don't want to be chasing gold right now. It's technically there's a lot of you can see we have bearish divergences here. We made it up to the resistance line, and then the bear stepped in. So I'm gonna be recapping the entire report that I have, and then going over showing the new charts and then where to buy it. But these are some of the ones that I was really, because I put in some stocks that I liked, and the one that really stood out was it was GFI. So again, I said I wasn't really looking to buy it. The trading range was between 7 and 17, and Goldfield it offers a 3.9% dividend. So this was a great, a great one to be looking at to buy for a long term. And on this, I was looking for a move near the 1260 here. And if we take a look at GFI here, hang on one second. I'm sorry, I just had to pause that. So again, with GFI, it's a great company. Gold is going to go up, and here you can see 1260 was my target. And if we go to GFI, it made it a little bit below that, went down to 1028. But this is the type; these are the types of moves that I'm talking about. So you have GFI that went from 1031 all the way up to 1450, almost a 45% rise in a matter of weeks. So I'm going to be putting out another gold report. Like I said, as soon as tomorrow, I'm going to go over all the stocks, where they were, where they're going, and it's going to be definitely worth the purchase on it because, like I said, anybody who waited on the last ones, because again, this is the August time period where I was putting that report out, and I said, don't be looking to buy this because we had sell signals, and you want to wait for it to come down into these levels here. And that's basically what, where things went. It went a little further, but again, even if you bought at the 1260, you're still up almost 20% on or 25%. And these are really the types of moves that I like. So keep an eye out on that. I may be sending out the actual gold report that I put out in August, and then just keep an eye on that part of it. So let's take a look at the regular markets. Here we go. We have the S&P. It gapped down today, made it down. Just remember, this was the target that I've been looking for. Was that the downside target was always down at this 41.85 level. We pretty much made it right at that support. You can see we had buy signals and we got a bounce, ran right into the resistance, and now we pulled back. But the important thing on this one, as far as the pattern wise, is this looks like an inverted head and shoulders pattern. So here's your left shoulder, this is your the neckline, and now we're making the right shoulder. This pattern is looking for 41.85. So it's really looking for close to a 40-point move above here. That brings us back up near the 4300. So that's one of the things that I want to look at. And then here's the 60-minute chart. And the reason why I didn't put out a buy alert on this is we didn't have any bullish divergences. So in my eye, we can see the inverted head and shoulders pattern play out here where we come up here. But then what it's going to be suggesting is that these aren't the lows, and we're going to see the momentum indicators move up, and then we're going to get the nice bullish divergence and be able to make a nice trade. So that's really what it is right now. As far as with the markets, I know things I've been saying it's pretty scary to be buying right now because you don't know what's going to happen, and that's why we want to just stick with the 100, 200 point S&P moves and stepping out and just letting everybody worry about what the big picture is going to be. So again, if the bulls can get it above this the 42.58, anticipate that we're coming up somewhere up into this 42.94 level, or into this resistance zone. If the bears can get through these lows, then what we're looking at is really a move coming down to the next pivot, which is going to be down near this 41.65 level, and possibly even down to the 41.10. So just sit tight. We've been very patient. We got out of our short positions pretty much right at the lows. Right now, we didn't get long here because because I said I didn't really see any true bullish divergences, and that we're probably going to come down and take these lows out or test them, and that's where we are. So we want to be patient, let everyone else run around with chickens without a head, and trying to figure out if it's a new bull market, bear market. Let's just keep making these consistent winning trades month in and month out. And I think that's really the easiest way to play this. So let's see what plays out tomorrow. Enjoy the rest of your night, and I'll talk to you guys in the morning.